I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, February the 27th. We've been harping about it being too dry all winter long, and now all of a sudden it has gotten too wet. If you go on the east side of the Midwest there and going off into the northern parts of the southeast and places, I mean, just really wet. Saw where Louisville, Kentucky's underwater. It was so wet around Oklahoma City, they barely had a run there. It's been wet across southern Missouri and northern Arkansas, all in that country, and really hampering livestock movement, sure, but just destroying people's lives in some cases. But let's look at the board that started out the week on Monday. After a kind of a bearish cattle on feed report, we'll talk about that a little bit more, but seemed like they decided to pay a little bit more attention to the bearishness that we did see on the cattle on feed report this month. But April live cattle futures down 85 cents to end the day at 124 even on Monday. Your April is sitting with heavy long positions from managed money, and that's kind of scary because all those were made with sell orders attached. So if we see a little bit of weakness in that April live cattle and they start bailing out of there, we know they're not going to be on the other side to prop it up. So that could really fall out of bed in a hurry if things continue to weaken on that. Your February spot live cattle futures down 60 cents, which is below what the current established market is now at 127.40. April feeder cattle, which is the mostly traded now, so we're going to switch that up on top. But April feeder cattle down 55 cents to end the day at 147.95. Your March spot feeder cattle down 45 cents at 145.55. Your weighted average on last week's fat cattle trade, it's funny, we keep seeing trade happen and nobody knows anything about it. We thought when we got mandatory price reporting that everybody was going to be on top of the market and everybody was going to know when cattle traded, what the level was, all the different prices and everything. And we're finding out that the negotiated cattle trade is indeed just like sheep. Like we always knew it was before. They all trade pretty much the same price, but we're seeing more trades spread out through the days, especially after the market gets established, and packers are coming in and doing a lot more on Friday that nobody's knowing anything about. But 15,200 head sold on Friday. That added up to 92,500 head in the 5-area feeding region. You see a lot of analysts look at the nationwide deal. Nationwide deal is not important in your negotiated trade. They're sitting way out there in places that are not actively involved in the trade, the market, what's going on. Only your 5-area feeding region is where you can really put the rubber to the road and see what's going on as far as the trade and the market. But 92,500 head in your 5-area feeding region. Live steers had a weighted average price of $127.95. That was $1.80 lower than the weighted average price from the prior week. And dressed steers, if you remember, the Northern Plains got to negotiate their own price there. They weren't stuck. And the weighted average dressed steer price was $204.69, down just 34 cents from the previous week. But look at that cattle on feed report a little bit more. You know, we've talked about it. We know what the numbers that come in. But it come in, and if you analyze it a little more, you see that we had the largest February 1st inventory since 2012. That's fairly significant. Our placements being 4.4% more than the same time a year ago. That was in all your feedlots over 1,000 head capacity. But if you look at Texas, it was up 11% on placements. They're blaming most all that on wheat cattle that got dry and misplaced. I think we're going to see a whole lot more of that when we see the next report come out, because that's you know, living around here and paying attention as I drive around the Amarillo area, you sure saw a lot more of that being done in February than you did in January. You know, I think maybe a lot of those Januaries were just placements of some Mexican cattle and similar things that they've been doing. They're ramping up some of the feedlots a little bit more than what they were maybe in years past. But the largest placement as a whole since 2006 for January placement. So that's a big deal. When you look at that and we think that maybe more wheat cattle did move in January than we thought, that should be hard on your June fat cattle board and maybe help out August a little bit, because we're going to see those cattle they gain good on wheat, but they don't gain on wheat like they do in the feedlot. And cattle have been gaining so good in the feedlot, they're going to be done quicker. We're going to have a little gap there at the end of the summer where maybe there's not going to be as many cattle ready, because a lot of them will be through the system by then. But a lot of these wheat cattle, if they did indeed go on feed in January, and they say a lot of them are going to be lightweights, but they put heavier cattle on wheat and on grass now than they did years ago and in years past. And a lot of those cattle, if they did take them off wheat and put them right in there, they are going to be right on the heels of some of those giant calves that moved out of that ranch country that had to go right to the feedlot. And they're not going to feed nearly as well as those cattle that had been turned out on wheat. So the cattle on wheat will likely catch them, and it's going to be a lot of cattle hitting the market at the same time. But you look at feeder markets, real-time index on Beef Market Central based on the 800-pound steer ended the day late on Monday at 147.15, down just 40 cents from the end of last week. Yet some of your bigger sales showed that the trend was a lot lower than that on big feeders. But also on your real-time index, the weights were up 3 pounds, up almost back up to 800 pounds, which we see a lot of 7-weight cattle go in there, which makes that weighted average fall below the 800 pounds a lot of times this year. So really, if you figure that 3 pounds, that RTI is not much lower. But if you look at your high volume sales, which weren't really that high volume this past Monday, but Oklahoma City only had 2,600 head. They do not like it around there whenever the weather's not ideal. But if you know Oklahoma City, a lot of their cattle come out of North Texas. And I'm not talking Texas Panhandle, I'm talking around Dallas area, up in that area. A lot of the cattle come out of there. It was really wet, freezing rain, ice last week, and those guys just didn't want to get those cattle up and get them moving. And so they had an extremely light run at Oklahoma City. The feeder steers were $3 to $4 lower where they could be tested. Some grazing cattle they called steady, and not enough calves to test the market. Joplin Regional Stockyards, 4,500 head there, even though it's very wet there. They're more used to it, and they do have a roof over the place. But feeder steers steady to $2 lower. Feeder heifers $2 to $4 lower. Calves are actually steady to 3 higher, with the most advanced seen on the heifer calves. But look at an individual quote to come out on Monday. Tri-State Livestock in McCook, Nebraska sold 62 head of 790-pound steers at $153.35. And that's your feeder flash for Tuesday.